Stephen Nathan on a Tuesday, and lots to talk about today. Let's start off with the ports. What a massive story that is. We're going to be talking a little later to Francois Norquier, who's the developer of Port of Gauteng, and he is very well plugged into what's going on at Transnet. But from a broader perspective, to see that finally the penny has dropped, we're an open economy, we need our ports to be functioning, and government's coming to the party.
Yes, that is really interesting to see. And I've got an interesting personal story. In 2004, when I was at Deutsche Bank, we were hired by Transnet, Maria Ramos at the time, to sort of look at Transnet and assist them with a financial strategy. And I actually organized a visit for us, so for Deutsche Bank to go down and visit Richards Bay Coal Terminal, and also the Durban port, and not knowing much about ports and logistics around that, I thought, let's go and visit. So we went down, a team of 3 of us, we went down to Richards Bay, the coal terminal and the port down there, and then greeting us was this enormous sign, Richards Bay welcomes Deutsche Bank, and they had this very elaborate reception. I think they thought the head of Deutsche Bank from Germany was coming there. So they might have been a little bit disappointed. So there was a bit of an awkward moment, but nonetheless, but what really stood out, it was a great opportunity to visit the private sector, because Richards Bay Coal Terminal is privately owned, and right next door to them, you've got the government owned. And just the difference in people, the difference in the environment that people working, the level of expertise, was really in stark contrast. And then we went down to Durban, and at that stage, Bidvest, I don't know if it's still the same today, but Bidvest was the only private operator of terminals. And we spoke to Bidvest, the private sector, and we spoke to government. And just to give you 2 sort of anecdotes that came out. The one was that the people from Transnet would say that it's incredibly frustrating. Whatever they wanted to do had to go through head office, even if it was just to recruit one person. So they couldn't recruit a person. They would have to go to head office, get the specs, get it all done. So it would take them months to get something as simple as that done. And another very interesting thing was around the railing to and from the ports. And what Bidvest would do is they would sort of charge based on a 2-way, whereas Transnet would have one rate and they would base it on 1-way. So they would not be competitive because they wouldn't take into account that the containers would have to come back, and they wouldn't adjust for seasonality either. And you just saw some really basic business principles and the enormous contrast. So as you say, the fact that that hopefully Transnet is going to bring in private sector expertise and resources would do an enormous amount of good for the efficiency of the port and logistics and our competitiveness as a country.
But it is interesting, Stephen, if 50% of South Africa's GDP is either imports or exports, and our ports are amongst the worst in the world. I think
probably the worst. I think the worst.
Yeah.
The worst out of 352, if that's possible.
Well, it is strange if you think about there's some pretty awful places on this world. So just a small improvement would have a significant impact on the economy. And if you do bring the private sector in the way that is now being proclaimed, it could be a spark for an economy that really needs it.
Definitely, as you say, it's such a critical piece of infrastructure that could make us so much more competitive and can reduce the cost of doing business and also ease the cost of doing business. I was speaking to some retailers recently, obviously with the unrest in Durban, they couldn't get goods in. A sizable retailer, so they said, we've missed our whole season. Just we've missed that, and obviously their kind of confidence and motivation to keep on investing in those kind of businesses reduces. So we're all going to be losers if we are inefficient. And as you say, the multiplier impact of getting that right on so many aspects of South Africa is enormous. And it's great to see that that's where the focus is of government. If this comes to pass, is that they're looking at areas that can have a large impact on society and on the economy and on job creation, as opposed to maybe window dressing here or there. So that would be a really big positive sign for us in South Africa.
The point you made a little bit earlier on the real basics not being handled, suggests as well that if we take the government-owned or government-run institutions like Eskom, now the ports and the railways, and you can go on to many other parts of this economy and put them into more efficient hands, it could be something that none of us have even considered the impact. But I guess against that, you have the dead hands of the trade unions. And with trade unions running the economic cluster in government, it's going to be very interesting to see how those discussions go.
Yes, that. I think that's our wariness. So, we're all concerned about government being very sort of a socialist and command and control type economy. Not very well, certainly favoring a government central planning and control of the economy, as opposed to letting the free market do its thing, hopefully in a responsible manner. But certainly the free market in just about every country in the world, I think there isn't really an example where the government has done a better job than the free market. So hopefully we do see that with government, and that's also part of the challenge that government has, is it's very closely aligned, obviously, with Labour and still the Communist Party, and the unions are very strong. And unions, while they do some good work, also a lot of the time they protect what they have rather than trying to grow what they have. So it's not the best partnership, and those are tough choices that government has to make if we are going to progress. And this will be a good case study to see which way they go.
There was an election in Zambia, and an ANC type incumbent close to Beijing, Socialist Party, was trounced by an economist who has, for the fifth time, taken on the president. And the economist, who is free enterprise driven, has come out with 2.8 million votes against 1.8 million for the incumbent. Even though the incumbent had everything stacked in his favor, he has been beaten. I guess the opposition parties in South Africa will be looking at this and saying, hang on, Zambia is very similar to us. They're going through an economic crisis. They have had to default on their debts. They've got amazing assets, second biggest copper producer in Africa, and that should be enough to make it into a very prosperous country. Perhaps the winds of change blowing to the north of us would be coming through here in the next election. Who knows?
Hopefully, as you say, I mean, it's a really interesting election, and firstly, that they can have free and fair elections, I think, is a really big positive. Even though the president was accused of some quite strong arm tactics in not allowing voters to free access to the polls, etc. So that's a positive sign that Zambia still has a vibrant democracy, and hopefully we can see a change in power there done peacefully. So that's a big tick. And then, as you say, what I've seen from the Zambian elections is that the new president-elect focused on the youth and offered the youth a better deal, a more prosperous future. And in South Africa, it's interesting because we've got, if you look at our population, we've got a bubble at the younger end. We've got a very young population. So the youth's ability to influence the electorate is enormous, and probably bigger than they actually realize if they could collectively mobilize that voting power. Because when you before you can sort of vote, you've actually got to register as votes. And I think in South Africa we've got quite low voter registration, and then even our voter turnout isn't so great. So if that can be mobilized in the correct way, it could be very interesting. And then, as you say, Alec, hopefully, the youth would be voting for someone with a party with growth-friendly policies that are going to create job opportunities, going to create prosperity, rather than a populist party that will promise a lot and probably deliver very little, if anything. So definitely a very interesting election and a case study for us to follow and hopefully emulate in a positive way.
It is interesting that the young people of today are so well connected through social media and access to information that they would know that there's 18 million votes that are up for grabs among the political parties, and the one that appeals most to the young voters is the one that's going to be doing best in the next election, whether it's going to be held now in October or pushed over until March next year in the municipalities. On a more investment-focused area, Michael Berry was made famous in the movie called The Big Short, and he's now taking on the local, or the latest hero of Wall Street, or certainly of the retail investors of Wall Street, Kathy Woods of ARC, the ARC exchange traded funds. Now, these are big names in the United States, perhaps not as well known here in South Africa. Have you been following that story?
Yes, as you say, Michael Berry is a very interesting person. His brief background is he was studying medicine, and he actually qualified as a doctor, and then he was going on to become a neurosurgeon. But then he kind of went into finance. He was quite interested in finance, so he is a real brain surgeon in finance, and he's a very independent thinker. He's actually, I think, been clinically diagnosed with Asperger's, so he's really bright, but very kind of unemotional. And often in investing, you need to be unemotional, because a lot of us get caught up in the fads of the day, and it's very difficult to separate your emotions and from just being rational, when everyone else is losing your heads around you. And he definitely is that, and demonstrated that very much, as you say, in the 2008 financial crisis. He spotted the sort of poor pricing and the poor credit risk of the mortgage-backed securities and the enormous risk that posed, and he profited very handsomely from that. So he's somebody who has a good track record, and you want to listen to what he has to say. And as you say, he's definitely going against the enormous popularity of the ARC fund, which invests in sort of new technologies. So their single biggest shareholding of over 10% is Tesla. Tesla, phenomenal company, but it trades on a 360 PE, so it's almost priced for perfection, and also quite heavily invested in cryptocurrency. And Michael Berry has been very sort of vocal against that and taken quite a sizable short position against that. What's also interesting about the shorts, Alec, and you obviously know this, but for some of the listeners, when you're an investor and you invest on a short basis, what that means is you sell something you don't own, and it's a very brave, risky thing to do, because if you own a share, you buy a share in, let's say, Tesla, the most you can lose is your capital. So if it goes to zero, you've lost all your capital. But when you short a share, you can actually have an infinite loss, because Tesla, if Tesla goes up 10 times, then it's basically 1,000. You can lose 10 times your investment there. So you've got to be really careful as a short investor, because of the leverage and the extra risk that you're carrying. But it is an interesting opposing ends of two smart people taking very different views. And that's always a challenge in the investment industry, is that for every buyer there's a seller. So it's not really about who's smart and isn't smart, it's about who gets it right, because often you have smart people buying and selling the same investment.